Hey everyone, welcome back. So today's Monday. We're going to talk about a couple of things here. As always, we're always going to talk about Bitcoin, obviously. See how it did today on the markets. We'll take a look at the charts. We'll take a look at Ethereum as well. We'll take a look at the miners also, see how they did. Some were up pretty nicely today. Some were down, actually. So we'll take a look at that. And then we'll also take a look at Bitfarms and Greenidge. They provided their Q2 financial results, but also Greenidge provided their July update. So we'll do that as well as part of Greenidge information. And that's it. It's pretty easy today. So as always, not financial advice. You guys know the drill here. I'm investing in the following coins and companies. And this is obviously for entertainment only usage, right? Okay, so let's get into the markets here really quick, and then we'll look at Bitcoin itself. So S&P was up 0.4% today. Dow Jones was up 0.46. NASDAQ was up 0.62. So overall, nice day in the markets. Let's take a look at Bitcoin here right now. Bitcoin is at 24,145 at the moment, and it is battling with that support resistance line, the green line here, which is at 23,800. It did touch it and then it came back off of it, up on it. So that's a good thing. We can look at it here maybe on the 1 hour chart. We can see that it basically did that in the last hour. It went down to it and bounced off of it, which is good, obviously. We want to do that. We want to maintain this support here at 23,800. And if we look at also the other lines that we're kind of showing you guys here, let's go back to the daily. Maybe that might be a little bit better to view it. We have the yellow line, which is the 20-day moving average. The light blue line is the 50-day moving average, and the dark blue line is the 200-day moving average. And then we also have the red line over here, which is the 200 weekly moving average. So right now, Bitcoin is above all those, and we're also seeing that the 20-day and the 50-day are crossing over. So that could be obviously a bullish sign as well. So that's something to look forward to, possibly in the short term at least. We might be going back up. RSI has come down on the daily chart, which is looking good right now. So we still have plenty of room to run up before we get into the overbought territory. But even then, we can hang out there for a while price goes up and RSI goes down. So we'll have to see how that plays out. On the 1 hour chart, we're in the middle right now on the RSI, about 48, which is good. No concerns there right now. So we still have obviously room to run up. But as long as we can hold this support at 23,800, we might be okay. We tested it and we bounced off of it, which is good, like I said. Ethereum, looking at Ethereum right now. Ethereum is at 1,906. It did, let's go back to the daily chart here. We've had last 2 days, we've been kind of in the red on it. We did get obviously as high as, what was that, a high of 2020. This was back on Saturday, it looks like. And then we've had a red day yesterday, and we're having a continuation of that as well today. And that could be just, Ethereum taking a little bit breather. It was a little bit overbought here. So it's possibly just taking a little breather before it continues to go up. But we'll have to see, obviously, how it plays out. Next is, we'll take a look at the stock market today for the miners. And let me get rid of some of these lines here, make it a little bit easier to see. And the daily lines. There we go. So Annie was up 8.79% today to 85, almost 86 cents. Argo was down 0.2% to 59 cents. On the day, Bit Digital was up 3.7% to $1.96. Bitfarms was up 9% today to $2.18. It was up a little higher than that. Obviously, it came down. They did provide their quarterly report for Q2, and looks like the market liked it because it's up quite nicely. It was up even more than that. CleanSpark was down 8.83% to $5.97. Cores was down 8.33% to $3.08. DigiHost was down 2.78% to $1.40. DMG was down 0.33% to 33 cents. Greenidge was up nicely as well today, up 11.78%. They also provided their quarterly report for Q2. We'll go over that. Hive was up 1.39% to $7.28. Hut A was up 1.14% to $3.56. Iris Energy was down 1.51% to $5.86. Luxfolio was down 7.27% to 10 cents. Marathon was down 3.23% to $17.65. And Mawson was up 1.88% to almost 99 cents, 98.99 cents. And then Riot was down 1.71% to $9.76. And Stronghold was up also nicely today, 12.46% to $3.61. So that is it for the miners there. Like I said, pretty much a mixed bag. Some were up nicely, others were not up as much. And let's take a look at our first story, which is going to be on, we'll do Greenidge first. Greenidge seems like the one to do since they also provided their July update. So Greenidge, as you may or may not be aware, I've started covering them here in the last 2 weeks or so. So we're just getting more and more data on them as they provide it. We'll get into all the second quarter highlights as well. And we'll get into all the nitty gritty here. But obviously you guys can take a look at this as well on Yahoo Finance, wherever you can find it. Here's the thing I wanted to cover really quickly here. So produced approximately 287 Bitcoins in July of 2022 and approximately 2.7 exahash of mining capacity from approximately 29,300 miners as of July 31st. And then the power plant uptime was 100%, but that doesn't mean that the miners weren't shut down. At least based on my math, it looks like the miners maybe were shut down for a little bit. And it's always based on the number of BTC that I'm using at the end of the month here. But I'm thinking about going through and getting the average Bitcoin price for the month. I'm not sure on that yet. I may test this out for the next couple months, see how it goes, see if I can get maybe a little bit more accurate numbers that way. That continues down here. They go into their quarterly results, and cryptocurrency was at 20.067 million. And we'll get into all the numbers here in my spreadsheet here really quick. But obviously you guys can read this when you have time to go over it. I'm not going to make this a long video. So let's get into my numbers here on Greenidge, and we'll look at everything here. So they provided us that they mined 287 Bitcoin, which by my accounts equates to about 6.1, almost 6.2 million in revenue. We have them at 6.196, so we're pretty close to that. And we did increase their hash rate up a little bit to get them to the 2.7, which is about, what is that, about 200 or so petahash increase from the prior month, which is good. They're getting miners installed. Right now, they are, let me see here. They're generating about 0.1063 Bitcoins per petahash, which is obviously a slight improvement over June. July was 0.0964. Which is good, and they also obviously increased their BTC production by about 57 BTC for the month over June as well. So that's pretty good. Looking back on it, it looks like they had a negative 27 in February that there were less, and then January, March was they had an increase of 42. April was down 9. May was down 2. June was up 35, and then July is up 35. So it looks like they are starting to grow a little bit, which is obviously a good sign here. So here are the numbers. They obviously didn't provide any HODL, so they don't HODL anything. Going down here, we can see that we installed the following miners here in July. Those were the 100 terahash miners, and it's these guys here. We installed approximately 3,150 to get into the 2.7 exahash that we needed to get to. And they still have quite a bit more to go on that. So it looks like 6.19 million roughly on this. If they're fully running next month, we're looking at possibly 8.6 if Bitcoin stays where it's at. Also, heading down to 25 days, roughly 25 and a half days on operations. And that could have been, they were basically selling the power out to the community more instead of mining, unless they were actually mining for 30 days, or 31 days in July, then that number would have been closer to almost 8 million, I think. So there's a little discrepancy here, but we'll have to see, obviously, based on what they reported as far as being mined in BTC and the end value of Bitcoin. That's kind of what we got them at 6.196 million for that month of July. Based on that information, what else can I show you guys here? Oh, I did check also the institutions for Greenidge today, based on the fact that they provided July updates. So on 8/15, we had 84 institutions, 3.42 million shares, which is an increase, obviously, and percentage owned has also increased to 25 by institutions. We still have the same buy ratings and hold ratings, and the price targets of still $10, $6.25, and $3.25 for the high, average, and low. So that is all good there. And let me see here if there's anything else I want to talk to you guys based on the July updates. Based on the July updates, it looks like they are about 57% installed from future hash rate. So they're going to be about 4.7 is what they're gunning for. And we have the average hash per miner is about 88 terahash, which isn't bad either. Okay, so let's get into the actual financials here, and then we'll kind of look at things, how they shaped up. So let's first look at the assets. Assets obviously decreased a little bit. Almost a third. So they were at 96 million in assets in Q1. In Q2, they're at 66 million. So that's obviously a 33 roughly a 33% drop. Digital assets didn't decrease too much. So that's at 323,000 compared to 393. Accounts receivable is actually higher, so that's good. Prepaid expenses is higher as well, so that's good. Emissions and carbon offset credits is about the same, a little bit higher, which is fine. We really don't care about that. We really care about the mining part of it. Property and equipment did decrease a little bit here in Q2 to 250 million compared to 292 million. Rights of use assets, don't care. Intangible assets, goodwill, about the same. Deferred tax assessment, that obviously decreased nicely here. Or maybe for the bad part, 17. Other long-term assets stay the same. So total assets is 342 million compared to 431 million, which is obviously almost 100 million, 90 million decrease in that. And that is possibly because of, looks like most of it is from property, it looks like. Property, and what else do we have here? That was cash, and cash equivalents was the big one there. Liability-wise, we're looking at accounts payable, 12 million right now compared to 14. Long-term debt is a little bit less, which is good. Lease obligations are down also. Income tax payable is down. Accrued expenses is up a little bit, about 6. What is that going to be? 6 million. And then emissions, don't care about that. So total liabilities did increase a little bit by about 17 million or so to 232 million compared to 215. And then we got stockholder equity is at 342 compared to 431. But here's the interesting part, revenues for them. So cryptocurrency data centers, so they actually looks like made more in Q1 than they did in Q2 on the miners. So 23 million compared to 20 million. Power and capacity, don't really care, is about the same. So services and other. Interesting part here is the cost of revenue. So for the data center, it was 8.4 million in Q1. Q2 came in at 11.66 million. So that's obviously a pretty big increase there, obviously, in the expense part of it, which is almost a 3.2 million increase in the quarter, which is obviously going to eat into their profits. And what else here was there? Selling general and administrative expenses has come down to 11, so that's good. So that's a 3 million decrease right there. Merger costs went up a little bit. Depreciation went up a little bit as well. And what else? So gross profit, they were basically negative 86,000 in the gross profit. They had a slight profit here in Q1. And then gross profit data center depreciation. So for this part here, I'm only looking at basically cryptocurrency data center, what the revenue was, minus the cost of revenue for that part. Then we're looking at about a profit of 8.4 million on it, which represents about 62% gross profit. And in Q1, it was 37 million and about 77. Right, that's not right. Oh, hold on. Let me fix that. Over 14 million. There we go. 14 million. And we should be using the same numbers here, revenues minus depreciation, so gross revenues. So we should be actually looking at, now I got to update this, because now we're looking at gross revenue, which includes power and services, so that's not correct. We should be only looking at the cryptocurrency data center part of it. So let me fix this really quick here. We'll get this solved really quick. Here, and we want to look at it here. There we go. So about 41% profit compared to 63% profit on the data center itself. So we got that resolved there. So obviously pretty big decrease here, 20% or so, 22% decrease in profits on cryptocurrency mining. A lot of it is obviously based on the fact that the price has gone up quite substantially here for their cost of revenue on cryptocurrency data centers compared to Q1. And obviously Bitcoin is down and hash rate's up and everything else is happening. So this is kind of where we stand on that one. Let's see, what else do we have here? So net loss, about 108 million compared to a profit of 461,000 in Q1. So, but they also put in a lot of stuff in here that was depreciation and other things, impaired long-lived assets, 71 million. They also had a remeasurement of environmental, no, where was it? There was something else. That was a pretty big hit on them. I can't find it now, but all in all, they need to improve, obviously, on their mining And here's kind of what we're looking at here. So I'm looking at some metrics here. So BTC mined is basically for the Q1, Q2 is 561 for Q1, 622 for Q2. Not a big increase there. Obviously, only an increase of what, 40, 60, 61 more BTC. And starting hash rates, and then we're getting the average hash rate here on both of these. Hash rate increase, so they increased 391. In the first quarter, they increased 794 petahash in the second quarter, which was obviously better, but they didn't earn any better on that one. And then we're looking at BTC mined per average hash rate for petahash, and then we have exahash. So petahash is 0.4, which comes out to be about 402 BTC per exahash in Q1. In Q2, we have 312 BTC per exahash. So obviously a lot less. We want that to go up going forward, I would assume. And then cost to mine 1 BTC is basically it was 15,000, because this should be multiplied by 1,000 to get the cost to mine 1 BTC was 15,000 in Q1 compared to Q2, which is 18,500. So, and that's being taken in by looking at the cost of revenue. Let me double check here. I want to show you guys how that's done. So we're taking the cost of revenue here for the data center, and we're dividing it by the number of BTC mined here. And that's kind of how we're getting that 18,000 to mine 1 BTC basically on the cost side. So that's obviously increased about 30% or so as well, which isn't good. We want to see that come down. And I'll probably do that when Bitcoin price goes back up on it. So knowing what we know now, we can see here that at the current prices, and I've updated here as well as what they mined. So, or what the revenue was, sorry. So I was off by 9.24%. I have it at 18.2 million. They came in at 20.06 million. I was obviously low on them. We did get them, and that's basically because I'm using the Bitcoin price at the end of the month. So that's why I'm thinking possibly using the average price to maybe get a little bit closer on it, especially when Bitcoin's going down in price. And they're using the daily price. I'm using the monthly price. So that's possibly where I'm off on that. That's kind of my thinking on it. Let me know what you guys think of that, using the average price of Bitcoin instead of the end of the month price. That might get us a little bit closer possibly. But we'll see. We'll have to see how that plays out. Either that, I'm going to have to just track every single day, which is going to be really tough. And I don't think I'm going to be able to do that. So we'll just try to get as close as we can. And we'll go from there. So that obviously is now, that should be used now in here. So yeah. So the last 3 quarters, we're using the numbers that they provided, the actual numbers. That got us to 76.999 million in revenue. And this is just for the Bitcoin mining, right? The current quarter, we're looking at about 23.2 million. That's a combined total of 100.2 million. If we're using the 50% net income from gross revenue, this should be around 25, 24. Obviously, they're also doing the electricity thing, other services as well. And some of those services are eating into it. So that's what I wanted to show you also, is not the assets, liabilities, revenues. So power and capacity was 2.8 million. And then if you look at the cost of it was 3.1 million. So obviously more than that. In the first quarter, they were actually better. They had more revenue than they had costs on it. But we're also seeing that services and other has been about 50% of their profits or so, which is fine. But obviously, the power capacity one was negative here on revenue. So that was that. And there's a lot of numbers here, and I do apologize. We just got to get through it here, guys. So looking at everything, like I said, this should be around 25, 24. Given with the state of everything is now, they're trading at, what are they trading? They're at $4.65. So somewhere around between 3.5 and basically 4 PE is where they're trading right now. I think once Bitcoin starts going back up, I think they will go up in value accordingly to maybe about 15, seeing that they're about halfway there to their future hash rate, to possibly 20, depending on how far Bitcoin goes up. So like I said, $25 to possibly $18, something like that, I think would be a fair value on them going forward. Unless Bitcoin starts really going up higher, then that's going to obviously change based on the numbers that we have right now. This is where I'm kind of seeing it right now. So Still undervalued in my opinion. Otherwise, what else can I say? I did not listen. I don't even think they had a conference call. If they did, I didn't catch it on them. But overall, a good month for them in July to getting their BTC up, which is good. But they still have to do a lot better getting that even more higher, I think, and getting miners installed and everything else. Okay, that's it for Greenidge. Let's get into Bitfarms, and we'll cover them as well. So Bitfarms provide obviously their Q2 report. So generated positive cash flow from mining operations, mined 1,257 BTC in Q2 and 500 BTC in July, which is obviously really good. Increased capacity and production with new locations in Quebec. Continue to build out in Argentina and on track to start production in Q4. So that's obviously all good. Let's get into this here really quick. By bringing online our first warehouse in Argentina and phase 3 of bunker build out, we are targeting 4.2 exahash and 6 exahash by the end of the third quarter and year end 2022 respectively. So 6 exahash by the end of the year is going to be pretty good. For Q2, so total revenue increased to 42 million, up 5 million or 14% from Q2 21 and up 4% from Q1. So they actually had an increase here from Q1, which is really good. Gross mining profit and gross mining margins were 27 million and 66% respectively compared to 28 million and 79% in Q2 respectively. So obviously margins have fallen down to 66 compared to 79. Operating loss was 173 million, including 78 million realized loss on disposition of digital assets. So they obviously had to sell assets, and 70 million unrealized loss on re-evaluation of digital assets. So they sold it, and then they also had to excuse me, revalue those coins that they currently have. And an 18 million impairment on goodwill compared to an operating loss of 2 million in Q2, which included an unrealized loss of 15 million on revaluation of digital assets. And that should have been probably Q1, I'm guessing they're comparing it to. Net loss was 142 million or 70 cents per basic and diluted share compared to a net loss of 4 million and a comprehensive loss of 9 million or 2 cents per share per basic and diluted share in Q2 of 2021. So, they're going back to from last year. So a big loss there for them. Adjusted EBITDA was 19 million or 45% of revenue compared to 24 million or 65% of revenue in Q2 of 2021 and 21 million or 53% of revenue in Q1. The company mined 1,257 BTC on average direct cost of production per BTC of 9,900 compared to 9,000 in Q1 2021 and 8,700 in Q1 of 2022. So that is obviously based on, I believe, the VAT tax that Canada has imposed on the miners, I believe. I don't think it was just on the miners, but in general, I think they increased their VAT tax on it. So that is it. Let's take a look at the numbers here really quick, and we'll be through with the video. Okay, so they came in at 41.815 million total is what they actually came in at. I had them at 37.7 million, so I was down 9.68, sorry. I was down almost 9.5%, 10% on that. I'd rather be lower than higher and give you guys an overblown price. So still want to be within 2.5%. And like I said, it's because Bitcoin, they're using the daily price. I'm using the end of the month price, which obviously has an effect on it. So trying to figure out a better way to get a more accurate number of Bitcoin. That's why I'm thinking using the average. But we'll see how that works out. Okay, let's take a look at the numbers here really quick. So current assets decreased to 45 million, almost 46 million from 77 million. That is a decrease of 31.312 million. Tradable receivables decreased also by 25,000, looks like, since this is in thousands. Other assets decreased as well a little bit here, about 791,000. Taxable receivables went up, actually. Digital assets was at 10.8 million compared to almost 99.25 million. Huge difference there, obviously. And then digital assets pledged as collateral, that has obviously decreased quite substantially to 51 million from 139 million. And assets held for sale went down a little bit from the 1.2 million to 1,081,000. Property and plant obviously increased in value to 228, which is good. Rights of use assets increased as well. Long-term deposits also increased, which is fine. Intangible assets went down a little bit to 798,000. Goodwill, we didn't get any impairments on goodwill, and deferred tax was 0 as well. So total assets 473 million compared to 639. That's a decrease, and that is mostly because of, well, digital assets. Basically, they sold digital assets and Bitcoin value went down. So that's where that's coming from. Liabilities, we did have an increase on trade and payables, accrued liabilities to 12.7 million compared to 10.79 million. And that's basically an increase of 2 million on that one. Current portion of long-term debt increased to 41 from 23. Current portion of lease decreased actually, so that's good. Credit facilities also decreased, which is good as well, to 38 million from 100 million. And tax payables is obviously zero. So total current liabilities is 96 million compared to 142. So that's actually pretty good that they went down. Long-term debt did increase a little bit to 26 million. Lease liabilities increased a little bit as well to 13 million. And assessment retirement provision increased to almost 6 million. And deferred tax was zero. So total liabilities is 137 million compared to 179 million. Right, 179 million, and now it's 137 million. So that's fine. So that's good. So they actually paid down debt, which is fine. And then stockholder equity is 335 million, and liabilities and stockholder equity is 473 million. So that's obviously a decrease from the prior period. Revenue, so self-mining 40.329 million in Q1, 41.815 in this quarter, which is really good. They actually did better in this quarter than they did in Q1 with prices of Bitcoin going down. So that's fantastic that they were actually able to pull that off. And energy infrastructure. So they were 9.59 million for Q1. Big jump here as well to 13.891 in this period. So that's obviously going to impact their profits. Depreciation was 17 million compared to 13. Purchases of electrical components went down to 257,000. Electrician's salary went down as well, which is good. And then cost of revenue came in at 32,000 basically compared to 23,000. So quite a big jump here, and most of it is from depreciation. So gross profit was about 9,500 on this. If we're taking into account all of the items here, it was 17,000 in the first quarter, which was obviously better. So gross profit margin was 22.73% compared to 42, almost half from what it was. And then gross profit minus depreciation was basically taken out using just the energy and infrastructure, not using anything else here, and subtracted from the revenue, and we got 27,000 in basically revenue just from that. And it was compared to 30,000, so pretty close to what it was back in Q1. Gross profit depreciation percentage was about 66% and 76% in the prior period. So not too bad. Obviously, they were able to earn more, but just profits came down because of increases in electricity, possibly, and obviously the VAT tax, I think, also took into effect for that. They didn't really have anything else that was really too big on here. Obviously, depreciation, but you can see energy infrastructure was the main one that was up almost 4.3 million in just this quarter alone, an increase. So other thing that was on here is selling and general administration was up to 15.3 compared to 13.8. So that is an increase. Realized gains, 77 million in here. Unrealized loss of revaluation was 70 million as well. So that's obviously what added to a big loss for them. Impairment of goodwill also had 17.9 million. So operating income loss was 173 million. Net income before tax, 161. And net loss income was 141 million, almost 142 million. And then we got the obviously share per price. So going back up here, do some metrics on them. BTC mining first quarter was 962. Q2 was 1256, which is obviously really good. They were up almost 300 or so BTC in the quarter. Starting hash rate, so hash rate increase was 364 petahash in Q1, 900 petahash in Q2, which obviously really helped them out to earn actually more. And then we're looking at BTC mined per exahash. So they had 382 BTC per exahash mined compared to Q2, which was higher, 398, which is really good. And then custom mine 1 BTC was basically 25,725 if we're looking at it with all the expenses added in there. And then if we're just looking at the power and infrastructure being added in there. We're looking at a total cost of about 11,000 compared to 9.9, almost 10,000 here. So pretty good on that part here. And then enterprise value, market cap, debt minus cash. We're looking at 433,640,121. And the current market value is at pretty close to that right now. Also, since we're using this number here, I think I updated this if I'm not mistaken. Okay. So the last 3 quarters, we're using obviously this June quarter and March quarter, we're using those numbers. So we're at 141,742,000. Combined with the current quarter, we're looking to be about maybe 34 million, but we'll see. Obviously, I was off by quite a bit here, a couple million, so we might be higher on that, depending where obviously Bitcoin ends up at. So we'll see, and how many miners that get installed here going forward. We could be higher on that. It could be lower. We'll see. But we're looking at 50% net income. They came in. What did we come in here at? Where was it? 25. Oh, it was down here. Sorry. Keep jumping all over the place. Here we go. We came in at basically 66%. So I think anywhere between 50% and 75% net income from gross revenue is our ballpark range that we're looking for. And we do have, about 200 million shares outstanding. So we're looking at basically right now about $8.87 and somewhere $13.31 right now at a P of 20. Right? Yep. Yeah. So that's kind of what we're looking at right now, currently on this. That could obviously go up higher, could go lower, depending on where Bitcoin ends up at. But right now it is trading at a PE of about about 5P right now. And I easily think they can get to 15, so 665 to $9.98 compared to where they are right now to $8.87 and $13.31. Somewhere in between that range is kind of what I'm looking at right now. Full disclosure, I do own Bitfarms, so just you guys know about it. And I think that's it. So obviously undervalued, just like most of these miners are right now. And the last thing we're going to look at here is the miner comparison. We're going to look at debt to equity ratio, current ratio as well on Bitfarms and on Greenidge. So Bitfarms, obviously what they provided, 124 million in current assets, current liabilities 96 million. So they have about 1.3 times the amount in order to pay for their current liabilities, which is fine. Total liabilities 137 million, and total equity is 335 million. So that is a debt to equity ratio of 0.412. Lower is better, higher is not good. And we do have obviously current assets minus total liabilities. They would be short about 13 million, but obviously they can make that up in pretty much a one month of mining BTC. So I'm not too worried about that. I'm not too worried about Sphere 3D either. They're pretty low on it. Biggest concerning ones are obviously Core, Marathon, Stronghold, and then Greenidge as well is pretty high up there. Total liabilities 232 million. Is that correct? Did I put that in correctly? Let me see your Greenidge really quick. Total liabilities. Yep, 232 million. So they're pretty high up there as far as being negative. And debt to equity ratio is 2.106. So they are pretty highly indebted, which is not good. And they even don't have enough right now from current assets to pay off total current liabilities. So hopefully they can start getting things paid off and getting their debt under control, I think. Them along with, who else is here in here? Mawson, and obviously Luxfolio we're not going to cover until we get some miners that are actually theirs that they're going to be mining. So we're not going to worry about them. But we are seeing obviously a lot more red here in this chart or in this column this quarter than we did in the previous quarter. In the previous quarter, we only had, I think, Marathon, Core Scientific, and that was Stronghold in there, I think, that was in there. And Greenidge we didn't have back then, so Greenidge is a new one that we added. Mawson wasn't even, I don't think, negative back then. So it is obviously getting a little bit more painful for the miners here, it seems like. But we'll see. Also, I almost forgot, I did listen to Bitfarms conference call, and I'm sorry I'm jumping all over the place because I got so many things in my head right now. A couple of things that they talked about in the conference call, and the question part was the actual interesting part of it all. So I'll just go over it really quick here. So Bitfarms, some of the notes I took on them was growth plans for 2023. They're still looking at Argentina at the 50 megawatts, so they see obviously plenty of room to grow there. Uruguay is another one that they're looking at. Washington State as well. They're saying there's quite a bit of hydropower opportunities there that haven't been tapped into yet, so they're working possibly to get those, being able to hook up to those power grids there. And then opportunities, they're also looking at possibly merger and consolidations are possible for them, depending on obviously the price of anything. So that's kind of interesting to see if they could pick up another miner or something like that. I mean, they don't really have too much. I mean, they got 48, almost 49 million in HODL position right now. So we'll just have to see, obviously, if they could actually pick anything up on that. As far as HODL strategy, they're trying to minimize shareholder dilution. They're trying to maximize financing flexibility, funding growth, and it is the least expensive form of capital. So selling BTC, obviously, to fund it. That's kind of what their strategy is. They don't plan on changing that anytime soon, they said. But things may change depending on obviously where Bitcoin price goes up and things like that, where they can maybe sell less and still sell some to obviously cover their costs and everything else. So we'll see on that one. Like they said, it is 9,900 to mine a BTC for them right now. And ASIC miners are much more liquid. So they're saying that they're much more readily available right now in the markets than transformers. Transformers are still really tight to get, which is kind of what we were seeing and reading from other miners as well. And then finally, immersion cooling, they're saying it's expensive, which I agree, it is expensive. They need to familiarize themselves with the technology, and they do have one container with immersion cooling being tested out. They even provided the facility where it's at, but I forgot to write it out. So they are testing it to see, what are the metrics for as far as costs to get it going. What is the return on it? How much can you obviously increase the hash rate on the miners? So hopefully you recoup your costs a little bit faster. But they did say obviously that air-cooled mining farms are far less capital intensive than immersion cooling. Obviously, immersion cooling is going to be a lot more expensive, and because you're using pumps, you're using the cooling material, the product, mineral seal, I believe, and some other things as well. And it is the coolers, the chillers, things like that. So that's obviously going to have an impact on it as well. So, but it is interesting. So we'll have to see how Riot, some of the other guys as well that are doing immersion cooling, how those numbers stack up on them. But I think that's it. So overall, a great quarter by Bitfarms. I was more surprised that they were actually able to be more or generate more revenue in Q2 than in Q1 based on where Bitcoin has come down. And Bitcoin has obviously come down quite a bit. Here, let's take a look at it here really quick where we started out at. Let's go to settings. We can see here, we were at 38,000 in January, 43,000 in March, or February, 45,000 in March, which are obviously pretty good months there. And then look at it here, April, 37,000, 31,000, 19,000 at the end of June. So obviously a huge decline there in price for them. So if they could get it, generate more revenue than Q1, that's really good. And I think that's why the stock obviously went up today because of that. And we'll have to see how the rest of the month plays out. And that is it. I hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. And that's all I ask of you guys. Also, spreadsheet, as always, is available to my Patreon members. Thank you to everybody there for their support. I do appreciate it greatly. And that is it. I hope you guys have a wonderful night. I'll see you guys in the next one. If I missed anything, leave a comment down below. I'll try to get it in the next video or something like that. All right? See ya.